Did you know that if you invest in what are known as collective investment schemes, commonly known as unit trusts or OICs, such investments have investor protection, much like a bank and building society account. For every banking group or building society group, there is an £85,000 investor compensation limit per individual. So if you're a married couple and you've got a joint account, you've got 2 times 85,000. So that's £170,000. But what not everyone realises is that if you invest in these type of investments, unit trusts and OICs, known as collective investment schemes, each fund management group, has an £85,000 compensation limit. So a typical financial planner such as I would recommend maybe 15 funds for you to invest in, and 15 funds would typically, each of those funds, the fund manager would invest in maybe 50 shares. So let's say you've got 15 funds with the 15 different fund management groups, 50 shares in each. I make that 15 times 85,000. That's 1.275 million. Now remember, that's per person. So if you invest money in a portfolio of 15 funds through an advisor such as us, Wealth and Tax Management, as long as you're not investing more than 1.275 million and no more than 85,000 in each fund, then if those fund managers were to fail, any of those fund managers were to fail, then you'd get 100% compensation, 100% of your money back. Now, of course, if there's 2 of you, then it's husband and wife, and it's 2 times 1.275 million, which comes to 2.55 million. That's quite a lot of money. Not many people are fortunate enough to have that much money to invest, but nonetheless, that's quite a lot of compensation. Now, there's more to it than that. Regardless of the compensation, there's also the fact that those investments, collective investment schemes, unit trusts and OICs, they all have what's known as a custodian, and a custodian is a kind of trustee, if you like. So when you invest in those funds, the money is not registered in your name, it's registered in the name of the custodian, which is usually a very large bank, independent of the fund management company. And the reason that's important, because if any of you remember Nick Leeson, Rogue Trader, there was a film about him. He was a fund manager for Byrne's fund managers a number of years ago, and Byrne's bank spectacularly failed because of his gambling on investing for the bank. So the bank failed, and at the time, individual investors only received £20,000 compensation each, because in those days that was the compensation limit, not £85,000 today. But what never made the headlines was that Byrne's bank also had a fund management arm called Byrne's Fund Managers, and they had these collective investment schemes, unit trusts, and nobody lost money on those unit trusts when the bank failed, because the bank could not touch those funds because they were registered in the name of an independent custodian. So of course it didn't make the headlines, it didn't make the news, because good news doesn't sell. Nonetheless, the money was totally protected. And what's another interesting point about this is that the association known as the Investment Association, of which all these unit trusts and OICs are members, has a 60-year history. And during that history, no investor has ever lost money from investing in a unit trust or OIC because of the failure of that fund manager. And I find that is quite an assurance. So not only linked to the investor compensation scheme, but the fact that there's a custodian involved with each of these funds means that your money is incredibly secure investing in these types of investments. Now, that doesn't mean to say the value won't fluctuate up and down. It will. But in terms of the security of your investments, I would say these type of funds are second to none.